Let's perhaps start with some context. The report talks about structural reforms that have contributed to a more positive growth outlook for South Africa. What are they?
Okay, so the growth outlook that we come up with now is first of all 0.9% for 2018, which was not yet finished, which is passed, but which numbers have not been produced. 1.3% for 2019 and 1.7% for 2017. This is not very high. This is barely above population growth, but this is broadly in line with what we see as the growth potential for South Africa. We are hopeful that some of the reforms that have been announced in 2018 in the investment and job summits, in the budget, will be implemented in 2019 to accelerate a bit growth, but we need that much more needs to be done to really lift up the growth potential of the economy to above 2%.
One of the issues, and South Africa is synonymous for this, is the implementation of policies and reform. The country and the government are very good at developing these policies, but implementation continues to be an issue.
That's true, and that creates some frustration. I think what we see as a credible way of implementing faster things, for instance, is the infrastructure fund, which has been announced during this MTBPS, which basically forces the possibility to for participation of private sector or in multilateral banks like the World Bank into public investment, and we see that as a great opportunity to improve the way South Africa implements its infrastructure project, make it faster, better, and more cost effective.
Mm-hmm. What about issues around debt stabilization? We do know that the country has been burdened with significant debt that continues to increase.
So there is a new objective in terms of debt stabilization, which is higher than the previous one, and it has been postponed to 2023-24. We nonetheless believe it's credible because the country had to face with unexpected shortfalls in revenues at SARS notably, and also unexpected shocks coming from the global environment. So we trust that the government will achieve its objectives. We were also very pleased or enforced in our view of the way the country is managing the macroeconomy when South Africa was able in August to weather the shocks that faced most emerging markets, and after the Turkish lira and the Argentinian peso depreciated rapidly. South Africa was able to withstand the problem and really limit the impact on the economy. So we have a good sense that the macroeconomic management in South Africa is good, but it does not suffice to elevate the growth potential of the economy.
Apart from that implementation issue that you've spoken about, there are other risks that could contribute to South Africa not growing as anticipated in the coming years. Talk us through some of those risks.
So you have global risk, global financial conditions tightening, interest rates rising up, repatriation of funds in advanced economies, you have trade tensions, you have oil prices that are still very volatile, and then you have El Nino coming back. All these shocks are there and it will stay there. So also those risks will stay there, and that further reinforces, put more pressure on South Africa to do his homework, to grow faster and better. And that's where we are advocating for some reforms in the tertiary education sector, which we see as a key sector to foster economic inclusion, to bring more people to labor markets, to generate greater opportunities for the youth in particular. And for that, we suggest a few options to make the system work better, understanding that the country is willing to spend more money into this sector after the decision has been taken by the former president to extend free education to a very large number of students.
And I'm glad you bring up tertiary education. I mean, the report talks about reforming the And I'm glad you bring up the tertiary education question. The report talks about reforming the education sector to help grow the economy. But we've got thousands of graduates that come through universities into a market that's got no jobs for them. So how do we create that relationship between increasing graduates but also making sure that there are jobs for them?
Well, first of all, everybody recognizes that there is a skills gap in South African economy. It was the most binding constraint that we ranked last year in terms of preventing faster growth and more economic inclusion. There is a large demand for skills in South Africa which are not being met by the South African systems. Okay, so it's true that there is unemployment among graduates from TVET and community colleges because the education they receive is not very good and it does not meet the demand from the market. But when you look at universities, masters, etc., the unemployment rate is 1-3%. The wages that graduates receive are extremely high. And so to us it's a sign that there is a demand on the market which is not met by the supply. So you need to work on the supply to make sure that the system, or the tertiary education system, supplies the right skills to the economy.
Apart from the loans that you've just mentioned, how does government provide the funding in terms of grants or subsidies in a sustainable way, in a way that won't further burden the country's fiscus?
It is costly. For sure, so it will cost an additional 1% of GDP when the effect will be fully felt after 4 years of implementation, and it's not sustainable in the sense that the investment that will be made by the government will not be recouped in higher taxes when the students will graduate, okay, because it's too much you put, and because you have to pay for, so we are saying that there's a much more sustainable system, which is the one where which covers the same risks for the students, but is only repaid by the students who graduate and find a job. Okay, and the money which is freed will be used to improve the education in TVET, etc. Meaning that down the line, these people will graduate, will get a better job, will pay higher taxes. And it's also a way to expand the system more rapidly, because currently universities and TVET college, they are highly constrained in terms of their admission capacity. They don't have the funds to meet the demand of all those new students who are now receiving financial support, want to get into schools, but the institution don't have the capacity to receive them. So you need to rebalance the system between the supply of students and the demand, the demand of education from the students and the absorption capacity of the system to make it grow faster and quicker.